Minimum. Good afternoon and welcome to the October Crop Production and WASDE briefing. My name is Joe Parsons. I serve as chair of the Agricultural Statistics Board here at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We're pleased to have Dr. Seth Meyer, USDA's Chief Economist, as our Secretary Designate today. Welcome, Seth. Dr. Meyer, I'd like to share that we have representatives from the National Association of State Departments of Agriculture and Planet Labs joining us today. And we're glad to have all of you with us. I also want to express our appreciation to our regional field office staff from our Delta and Southern regional offices that came in to assist on today's reports. I have a few notes for our live streaming audience. The crop production and WASDE reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the contents of the reports within 1 hour of their release. We will not be taking questions during this briefing from the public. However, NASS and World Board staff are available for email and phone questions, and NASS will host a social media event 1 hour after the release of these data. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy between what's presented at this briefing and the published estimates, always refer to the official published estimates. With that, I'll turn it over to Lance Honig. Lance will be immediately followed by Dr. Mark Jakanowski, Chair of the World Ag Outlook Board.
Thank you, Joe. Afternoon, Seth. Welcome. There we go. All right, well, we're going to jump right in here. And before we get into the numbers, though, we had a little hurricane happen here recently. And so we've got this special note on the front of the report, and basically just to highlight what's happening. As you know, a couple of landfall timeframes for Hurricane Ian. The first on September 28th in Florida, the second on the 30th in South Carolina. But really what's meaningful is the second and third paragraph. You can see in the second paragraph, this is our first forecast of the season for our citrus crop down in Florida. All of the field work was done before the hurricane made landfall. And so therefore, these numbers that we're publishing today for citrus in Florida are not going to show any impact from the hurricane. Quite frankly, it would have been a little bit soon probably to gauge the impact anyway, but nonetheless, our next citrus forecast will be in the December 9th crop production report. And at that time, we'll have an opportunity to see what kind of impact it may or may not have had on that crop. And then last but not least, as far as other crops grown in that portion of the country, our survey work did extend beyond the landfall timeframe there. But as you know, when these events happen, you may or may not capture all of the impact, if there is any, that soon after the report. So we'll just have to see if future reports show anything additional to what you see in the report today. This one graphic, I'm not going to go into a lot of detail in terms of what happened with the hurricane, but this is an example of a product that's generated by our research and development staff here at NASS. This and many other objects will be posted to our website, just like we do after many of these disaster events. This particular image shows the path of the hurricane. You get some time frames in there and some additional information included there as well. But again, just highlighting some of the work that folks can go out to the website here shortly and see some more information specifically about how it ties in with agriculture in that part of the country. So with that said, let's go ahead and move forward with the report. As usual, I'll start things off by talking a little bit about the data sources that we used in putting these forecasts together. Lots of different information to talk about. First of all, our farmer reported survey, or ag yield survey. You can see this month, just over 8,200 producers were contacted from September 29th through October the 5th. As usual, again, asking them to report their expected yields, or this time of year, in many cases, actual yields, depending on where they're at in the harvest process. In addition to that, some field survey activity. First, our objective yield for corn, cotton, and soybeans this month. 3,930 samples combined between those crops. Our field work there was completed September 24th through October the 1st. And of course, this is where we send the trained enumerators into those fields to take counts and measurements and ultimately harvest those plots. In addition to that, lots of field work conducted in Florida as usual. You can see 3 different efforts will focus on the tree inventory. That work is really a year-long event, and you can see essentially culminating at the end of June. Limb count work, you can see nearly 3,000 groves visited there up until September the 16th. And then last but not least, our first iteration of the size and drop, which will be repeated in the upcoming forecasts as well. That work this month was, as I kind of mentioned, wrapped up by September 23rd, so a bit ahead of the hurricane there. In addition to all of the survey work, you can see we've also got our remote sensing information. We'll show you some graphics on that here in just a bit. And then last but not least, the FSA certified acres for a few of the crops come into play here as well. Not the crops we necessarily have seen in October in the past, because we, as you know, advanced that a month earlier and covered it last month. This next slide I have is the first map. This just shows you those ag yield sample sizes by state. And of course, you'll see the higher counts where you would typically expect to see based on the crops we're covering today. Next, we'll move into corn. First, just give you a quick update on harvest progress. This, of course, is information from our weekly crop progress and condition report. Here you can see the percent of the corn harvested by week. The previous 5 seasons there this year, current season is the red line. As of October 2nd, 20% of the corn was harvested right around that reference period for our forecast. Actually, you can see, although we've been a little bit behind this year, in fact, a year ago it was 27%, average is 22%. So finally catching up pretty close to where we should be this time of year. With that said, let's go ahead and look at the updated forecast for corn. No change to planted or harvested acreage from our previous forecast, but yield we're now forecasting at 171.9 bushels per acre. That's down just 0.3% or 0.6 bushel from last month's forecast. Of course, we are down 2.7% or 4.8 bushels per acre from last year's final yield. That puts our production forecast now at 13.9 billion bushels. That's down just 0.3% from last month, but 8% below what was produced last season. Next, we'll take a closer look at that yield forecast and how it compares over the last 30 seasons. You can see the trend lines plotted in there. The 171.9 bushel forecast, again, you can see falling below trend this year. This next map highlights the corn yield forecast by state and a comparison to the previous month's forecast. So the way this map is laid out, the top number is the current month's forecast for each state. The lower number represents the percent change from last month's forecast. All states that are colored in any shade of blue are increasing from last month, while any shade of red is decreasing. And of course, the deeper the tone, the larger the change. But as you can see, most of the change is not big this month. Some of the bigger changes we do see South Dakota, Nebraska, Kansas. Of course, that's where we've seen this extreme dry conditions this year, down a little bit more even again this month. Some bright spots to the east, though. Illinois in particular, you can see up 2.9% month over month. I believe that's 6 bushels per acre from what we were forecasting last month. And of course, anytime you see a pound sign next to a number, indicates that is a record high, and you will see record highs expected in California, Illinois, Virginia, and Wisconsin this season. Excuse me, this next map, again, highlighting those current yield forecasts by state, but here you can see the percent change from last year's final yields. So you see a lot more red on this map, obviously, as we do see lower yields across most of the producing area this year compared to last. Again, Illinois standing out there with that record high yield, and then of course North Dakota, Minnesota, really a rebound there from poor conditions last year. As promised, this shows you some information based on the remote sensing work that we've done. This is the modeled yields based on the NDVI data in particular. And of course, the way this map is laid out, you can kind of see the color scale there. Anytime you see those deeper bluish green type colors, those are the higher yields. The more brownish tones are the lower yields. You can really see Illinois standing out here with some fantastic yields there, driving that record high production. And then of course to the west, as we talked about some of the dry conditions, South Dakota, Nebraska, Kansas, definitely reflected in what we're seeing from the satellites this month again. This next chart highlights some information from our corn objective yield survey. What you see on this graphic is the percent of those objective yield samples that were processed in the lab this month. And as you can see for corn this year in October, 88% of those samples processed through the lab. A little bit lower than what we've seen in recent years, again reflective of the slower development this year, but not significantly behind what we would typically see. Some additional information from the corn objective yield survey here. The way this graphic is laid out, each of those vertical bars represents the number of ears per acre as indicated by the objective yield survey. The red dots represent the published yield for that combined 10-state region. Looking at the number of ears per acre, 28,500, that's the seventh highest number of ears on record. And again, our yield for the 10-state region, 179.1 bushels per acre. Next, we'll take a look at the corn production over the recent seasons. As I mentioned, the decline from last year, but still the seventh highest production on record. Next, we'll take a look at today's NASS corn production forecast and how it compares with the published expectations. You can see that red block falling right in the middle of the blue dots, so pretty much right in line with what folks were expecting today. Next, we'll switch over to soybeans. Again, update on the soybean harvest progress. Again, going back to October 2nd, 22% of the crop was harvested. That compares to 31% last year, 25% on average. A little bit behind at that point, but it's actually caught up more than that the last week. So we're pretty much definitely moving along on pace now with harvest. Looking at the forecast, again, like corn, no change to planted or harvested acreage this month, up just slightly from last year. Our yield forecast, though, is now 49.8 bushels per acre. That's down 1.4% or 0.7 of a bushel from last month's forecast. We're now down 3.7% or 1.9 bushels per acre from last year. Production now at 4.31 billion bushels, 1.5% below last month and 3.4% below last season. Taking a quick look at that yield forecast again and how it compares over time and against trend. That does represent the fifth highest yield on record, even though it's just a bit below trend this year. Next map just highlights the current soybean yield forecast by state and how they compare with last month. Again, this map laid out just like the one I showed you for corn. Again, anytime you see the pound signs, that's a record high. Arkansas, Mississippi, and South Carolina all expecting record high yields this year. Otherwise, you can see the changes mostly minor compared to last month. Again, you do see the declines in South Dakota, Nebraska, and Kansas due to those continued dry conditions. The next map here, again, just comparing those current yield forecasts with last year's final yields. And again, much like corn, you can see declines across most of the growing area this year. Here we'll take a look at what the satellite modeled yields look like for soybeans. The color scheme the same here, not quite the same depth of color that we saw with the corn in Illinois, but definitely high yields there as well. Generally speaking, pretty much the same pattern we saw for corn in general. Next, we'll take a look at the percent of the soybean samples from objective yield that were processed in the lab this month. You can see the 42%, a little bit behind what we have typically seen in October, but again, with some of the slow progress up to this point, holding us back just a little bit there compared to normal. Some additional information here. You can see the number of pods per 18 square feet from the objective yield survey in those vertical bars. And then, of course, again, the red dot representing yield forecast for that 11-state region here. Relatively low pod counts this season, as you can see there, but obviously made up for the most part by the higher pod weights. As you can see, those yields still upward, pretty much where we've seen in the last couple of seasons. Next, just taking a quick look at the production, how it compares over recent seasons. The 4.31 billion bushel forecast is the fourth highest production on record. We're also looking at record high soybean production in Illinois, Indiana, Mississippi, New York, and Wisconsin this season. Taking a look at the soybean production forecast now, it compares with the published expectations a little bit below what folks were thinking with that reduction this month. Might be a little bit more of a surprise here today. Next, we'll move on to cotton again. So harvest progress here, you can see cotton harvest actually running a little ahead this season at 22% as of October the 2nd. Average of 17%. So moving along well there. Looking at the current forecast, again, no change to the planted and harvested acreage this month. But of course, the big story this year is the high abandonment, particularly in Texas. Overall, though, we're now forecasting yield at 842 pounds per acre. That's down just 1 pound per acre from last month's forecast. It is still above last year. So overall, the production forecast virtually unchanged. Million bales. Just a quick update on how that 842 pound yield compares to recent seasons. You can see this is the fourth consecutive year below trend for the cotton yield. Looking at the cotton yields by state and how they compare with last month, here you can see that 8th highest yield on record nationally, driven by some changes here from last month, mostly to the west. You can see Texas actually up from what we had previously forecast. Earlier, if we make those same comparisons year over year, though, you can see declines across most of the growing area. A little confusing at first when you look at this map, because overall we're looking at a higher yield nationally, but you see mostly red across the map. But with all that abandonment in Texas, larger proportion of the acres shifting to the east where the yields are higher. So as a result, that's what you end up with, a higher yield nationally with mostly declining yields on a state-by-state basis. Looking at that production total over time, the 13.8 million bales actually is the lowest total since 2015. Taking a look at that production forecast now, it compares with expectations. So here you can see a bit higher than folks were expecting. Overall, it looks as though folks expected a little bit of a drop this month, but again, as I mentioned, our forecast holding pretty much right along with where we were a month earlier. We do have a number of other crops included in the report today as well. Canola, you can see this is a month for updating planted and harvested acres. They were not forecast last month, so we're making those updates primarily driven by the FSA certified acres this month. You can see up 13% from what we had previously estimated. It is our first yield and production forecast of the season, though. You can see the 1,826 pound per acre yield up 40.2% year over year. A lot of canola up in North Dakota in that part of the country. So that's really a rebound from poor conditions last year, although it is still a very good yield. In fact, we're looking at record high planted, harvested, and production for canola this year, with the third highest yield on record. Looking next at the dry edible beans, again reviewing acreage there this month, down 2.6% from what we had previously estimated for planted and harvested area. Yield at 2,095 pounds per acre, up 5.9% from where we had previously forecast. So overall production up 3.1% from that previous forecast. Looking at our hay crops, no change to the acreage there, but alfalfa yield at 3.16 tons per acre, down just 0.3% from what we forecast back in August. It is down 2.2% from last season. In fact, that's the lowest yield for alfalfa since 2012. Looking at other hay production, again, no change to the acres, but 6.9% drop in the yield from what we had previously forecast. That's now the lowest yield for other hay since 1988. Of course, all those dry conditions in the western portion of the country having an impact there. So overall, expecting other hay production to be down 10.9% this year. Looking at peanuts, no change to the acres. Yield is down 1.3% from the previous forecast. We're actually down 1% year over year now, but still the third highest yield on record. Looking next at rice, just a small adjustment to the yield there. You can see up just 0.2% from the previous forecast. It is still below last year. Overall, with the acreage drop, though, 13.7% cut in production compared to last season. Sorghum, no change to acres there. Yield at 44.6 bushels per acre. That's down 3% month over month. Big drop from last year, again, with the dry conditions. Of course, Kansas and Texas, your leading producing states for sorghum there. For overall, 45% less production this year. Sugar beets, no change to acres. Slight adjustment to the yield, down 0.7% month over month, putting our production at 33.1 million tons there, 10% below what was produced last year. Looking at the sugar cane, slight adjustment up on the harvested area, just 0.3% from the previous forecast. Slight adjustment upward on the yield as well. So overall, the production there up nearly 1% from our previous forecast and 4% above what was produced last year. Looking at production in Louisiana, second highest on record. So very good sugar cane crop in Louisiana. Sunflower production, you can see some adjustments to the acreage there as well. This is our first yield and production forecast, so first opportunity to make those acreage adjustments as well. Overall, we're looking at a lot higher acreage, a lot higher yield this year, so overall production expected to be up 52.8% from some of the challenges faced by producers last year with the dry conditions then. Looking at the second highest yield on record for all sunflowers, and if realized, the second highest in both North Dakota and South Dakota. And then last but not least, on the field crop side of things, tobacco, you can see slight downward adjustment to the harvested area this month, but a slight adjustment upward on yield. So overall, we're down 1.7%, 9% below what was produced last year. For the burley and light air cured, harvested acres in production are record lows this year. We do have a few other crops included as well. Our pecan forecast, you can see, is up 13.8% year over year. Production in Georgia, of course, that's our leading producing state, up 58%. But if you remember back to last year, it was relatively low production, some impact from the previous hurricane situation there, damaging some trees. And so it's kind of a combination of bouncing back from a low level last year, but also that's a very good production number for Georgia this season as well. And that's what's driving the increase that you see nationally this year. Next, we'll move on to the citrus forecast for this month. We'll start things off with all oranges. You can see 3.19 million tons there expected to be produced. That's down 8% from what was produced last season. You can see the split on the non-Valencias and Valencias. We'll look at it that way first, but we'll break it down by state. So let's look at Florida first. We're actually looking at the lowest all orange production in Florida since the 1941-42 season. Basically, we're looking at low fruit size this year, as well as a reduction in acreage. If you break it down by the non-Valencias, you can see there we're looking at a Florida crop that's down 5.8 million boxes from what was produced last year. That would be the fourth lowest non-Valencia production in Florida on record. We're also looking at a big drop on the Valencia portion as well, down more than 7 million boxes. California, though, completely different story there. On the non-Valencia is actually up 6.2 million boxes from what was produced last year. Small increase year over year on the Valencia crop. So again, that's how you end up with an 8% drop. Overall on the oranges, California offsetting some of the drop in Florida, but not enough to make up for the losses in Florida. And again, that's without hurricane impact. So we'll see what happens in December there as well. Moving on to the grapefruit, 329,000 tons expected to be produced there. You can see that's down 12% from what was produced last year. Again, Florida production dropping significantly from last season due to lower acres and lower yield. In fact, they're expecting the fourth lowest grapefruit production on record as well. California production unchanged from last year, Texas up just modestly year over year. Looking at the lemons, 966,000 tons, that's down 6.6% year over year. California is actually down 1.9 million boxes from a year ago. Arizona's up slightly, but again, it's the California drop that's driving that change. And then last but not least, the tangerines, 833,000 tons expected to be produced. That's up 13.8%. California's rebounding from low production last year, expecting that crop to be up 2.6 million boxes year over year. Of course, they're the largest producing state for the tangerines. This next slide just highlights some of the upcoming reports over the next month. You can see on the 21st, cattle on feed, cotton ginnings, and rice stocks, ag prices at the end of the month. And of course, on November 1st, as usual, you'll see our care reports that we usually put out at the first of the month. And then we'll be back here on November 9th for that next crop production report. A couple of quick reminders for folks of some things coming up. First of all, our fall data users meeting scheduled for November 15th. It will be a virtual event this fall. Registration information will be coming soon, but go ahead and mark your calendars now for the afternoon of November 15th. And then, of course, a quick reminder here that at 1 o'clock Eastern time this afternoon, I'll be on Twitter as usual, hosting our Stat Chat event, so folks will have an opportunity to ask any questions that they might have about any of the numbers in today's report. So that's the last slide that I've got for you. I will pass the baton over to Mark.
Thank you, Lance. Good afternoon, Seth. Yes. Let's move into the WASDE. I'll walk you through our through what we put out just about 30 minutes ago. A couple highlights here. Of course, this month, as usual, we're incorporating all the information we got from the crop production report this morning, but also importantly, the information we got on September 30th from the grain stocks report and the small grain summary had pretty important implications for several of the balance sheets for various crops. Also looking at Southern Hemisphere, dry conditions in Argentina, potential implications for the wheat crop there. And also we'll talk a little bit about Pakistan. You might recall we talked about Pakistan last month too. The flooding floodwaters are receding slowly, and that's continuing to impact both cotton and rice. So let's jump into wheat production. Wheat production down this month relative to where we were last month, still up year over year, and despite the decline this month, that production would still be a record. You'll see the largest decline, largest contributor to the decline this month is in the United States. We'll talk about that soon, reflecting mainly the information that came out of the small grain summary. Also, we pulled back our forecast for Argentina, again, based on dry conditions there. I got a couple slides I'll share with you on that. And offsetting some of those declines is a higher crop production forecast for European Union, mainly reflecting government data and higher production in Poland and Germany. So real quick on Argentina wheat, quick review of where main areas in the country where wheat is produced. The bulk of it being in Buenos Aires and Cordoba. And at this point of the year, we're kind of in the mid-development stage of the crop. Still, harvest hasn't yet begun. That'll start next month. But over the past couple months, it has been dry. As you see here, just to point out, give you where to look at on the map here. This is Uruguay, so Buenos Aires, Cordoba. August, things didn't look too bad, getting some decent rains, but by the time we got into September, conditions dried out quite a bit. and that crop is still in the development phase. It hasn't been incredibly hot, which has been good, but you know, based on the weather data and based on the other information we have, we made a cut to that crop forecast, lowering both yield and harvested area. Global balance sheet for wheat. We talked about production down this month, driven mainly by reduction in the U.S. as well as Argentina. Other than that, feed use up a bit. That's mainly in the EU, where the crop is where we adjusted the crop higher. And trade down this month, 600,000 tons, and that mainly reflects lower exports from the U.S. and Argentina, offset to some degree by higher exports from the EU, given their larger crop, and ending stocks tightening up, and that is largely in the U.S., given the smaller crop that we're looking at here. So U.S. balance sheet, I put up the old crop here, just finishing up the chewing up the last year's data based out again on the stocks report, leading to slight increase in ending stocks for last crop year, carrying in 9 million bushels more into beginning stocks this crop year. But the big change in the balance sheet this month, as you can see, is a sharp reduction in production based on that small grain summer report, about an 8% decline in production from what we had been forecasting. And so with those tighter supplies, that's going to tighten up the balance sheet in various ways. Exports down, basically lower exports of all classes except SRW, and it also is reflecting the slow pace that we're seeing in the U.S. Imports up a bit, that's all HRS. Hard red spring coming in from Canada. Feed and residual down, again, based on September 1 stocks. Worth noting here, too, that this would be the lowest first quarter disappearance total since the 1983-84 crop year. We're looking at the lowest ending stocks now, ending stocks tightening up, lowest ending stocks since the 2007-2008 crop year. And lowest exports, if this forecast is realized, that would be the lowest exports since the 1971-72 crop year. So balance sheet tightening up quite a bit there for wheat. Let's move into rice. World production down this month, driven mainly by reductions in India and Pakistan. Brazil production, we adjusted upward a bit based on data from Konabi. Egypt up a little bit based on an area increase and information from Post. India, that 2.5 million ton reduction, that reflects India's first advanced estimate, and it's a smaller Kharif crop. Pakistan, as I noted in my intro, driven by flooding conditions that continue there. And Thailand, looking ahead to the new crop, they've had good rains, good reservoir, good reservoir availability, so indications that their production will increase. So real quick, Pakistan and rice production. So in terms of where we are in the crop cycle, harvest is just about just getting underway, typically. But as you know, as I talked about last month too, tremendous amount of flooding, especially in the southern part of the country around the Sindh province where a lot of rice is produced. And we can see from the satellite data, this is the NDVI data, that the dark blues actually show standing water, comparing 2021 to 2022. Massive amounts of water still standing in the fields even into early September. So safe to say, a lot of the rice fields that have sustained, underwater conditions for weeks and weeks are likely not to produce. So that is what driven our cut in Pakistan production this month. But nevertheless, they're still producing, still expected to export, still a reasonably large crop. Global rice supply and demand. Talk about production tightening up, and for the most part, with a lot lower production, that is just tightening up ending stocks, leading to tighter ending stocks. Ending stocks mainly being reduced in India and Pakistan, given the reduction in production there. Trade down, again, reductions in exports from India and Pakistan, offset to some degree by higher exports from Thailand, Brazil, and Vietnam. U.S. balance sheet, pretty minor changes on the production side, as you saw from Lance just a few minutes ago. Main story here, I think that's worth drawing your attention to, is another cut in our export forecast for rice. This is all long grain, the cut in this month, and just not very competitive even in the Western Hemisphere. Worth pointing out here too, this if realized, these would be the lowest. This would be the lowest export volume since 1991-92. So again, relatively high prices, tight supplies, making us uncompetitive in several of our regular Western Hemisphere markets. So moving into corn production, I put up the back here. Corn production here as well as the out year. Just to point out a few important changes we made this month. Argentina production adjusted a little bit lower based on some indications that we have from export data suggesting that crop is probably smaller than we had been expecting. Also adjusted the U.S. crop lower, again, based on the information we got from the stocks report last month. So that all has some implications for carrying in the balance sheet, which I'll talk about on the next slide. Now looking at the new crop year, European Union, well, overall, as you can see, production tightening up a bit there, lower production in the U.S., and also a cut in European Union's corn production based on harvest results. As you know, it's been dry, especially in the southern part of the continent. So harvest results coming in, lower than we had been carrying. So that's driving that cut there. And then India up a bit, just based on some government data. Serbia down as well. In terms of the balance sheet, as I noted, based on back year changes, we're beginning stocks are coming into this new crop year, tightened up a little bit this month. Also production down, we talked about that in the previous slide as well, driven by US, EU, and a few other countries. Overall, supplies tightening up 9 million tons this month. So again, reduction in the beginning stocks reflecting mainly the US, China, and Ukraine as well, worth noting. Feed use down overall globally, up a bit in the US. We'll talk about that on the next, on the US balance sheet slide. But feed use down in the EU and in Ukraine. Trade down to this driven mainly by reduced exports from the US, offset partially by higher exports from Ukraine and India. Just worth noting, so we did raise our Ukraine export forecast this month. We're now at 15.5 million metric tons. That's up from 13 last month. Overall coarse grain exports from Ukraine up 3.1 million tons this month. Global ending stocks for corn down 3.3 million tons. That is mainly lower stocks in China, Ukraine, and US. So US balance sheet, again, back year changes, just putting those up there just so that we incorporated the data from the grain stocks report that came out September 30th. Essentially, that whole balance sheet for the old crop year is now final, truing up all the demand side components as well. But then looking at the balance sheet for the new crop year, production down this month, driven by a sharp reduction in ending stocks, again, reflecting those September 1 stocks that we got out of the September 30th crop report. A small reduction in production this month from NASS combines to reduce total supply by about 171 million bushels. Small increase in imports as well, helping us out a bit, but the rest of the balance sheet there, feed and residual up a bit. That's kind of carrying through from the indications that we had from last crop year based on that grain stocks report. Pulled ethanol forecast back a bit. Recent data has been suggesting relatively slow production, ethanol production from corn. Gasoline demand has been soft, so tightening up that use a bit. Big change, of course, being the reduction in exports, relatively slow sales, and just given the tight supplies, much tighter supplies that we're both carrying into this year's crop and producing this year, much that will come out of exports. So stocks to use ratio tightening up a little bit, ending stocks tightening up just a bit, and season average price, we raised it in nickel. Moving into soybeans, world soybean production. A couple things to point out here. Of course, we'll talk about the U.S. Lower production in the U.S., but we also raised Brazil's production forecast. That crop planting is just getting underway. So this is an area change, and it's following some information we also got from Conabi that suggests higher area. Canada up a bit as well. That's also just based on government data. So in terms of the global supply and demand balance, beginning stocks up, carrying into this year. That's mainly higher beginning stocks in U.S., Argentina, and Brazil. Production up, we talked about that, mainly driven by increase in Brazil, offset by slightly lower production in the U.S. Crush up this month to 2.4 million tons. That's mainly increases in Brazil, China, and the U.S., offset by lower crush in Argentina. Trade up 1 million tons. That is mainly driven by Argentina and Brazil. You might recall Argentina did some manipulation of their exchange rate to favor soybean exports. That was very effective, so that's showing up there. And then Brazil also just took a larger crop, larger supplies out of Brazil, suggesting higher exports from them as well. Of course, that also means lower exports for the U.S., which we'll talk about in the next slide. Imports from China have raised 1 million tons this month as well. U.S. balance sheet, again, putting up the old crop year just to show you how we incorporated the grain stocks information. Again, all of that data for the old crop year balance sheet is essentially final at this point, and it indicates that we're carrying in about 34 million bushels of higher beginning stocks than we had been forecasting for the new crop year. Production down this month, 65 million bushels. So total supplies tightening up by about 31 million bushels. Mainly going to show up in lower exports. And again, this is reflecting higher exports, more competitive exports out of both Brazil and Argentina, large supplies there. Relatively tight supplies in the U.S. So favoring exports out of South America. Not much of a change in stock-to-use ratio. We lowered the seasoned average price 35 cents, mainly reflecting higher global supplies, despite the fact that you can see U.S. supplies are tightening up. Let's move into cotton. Also here, I put up the back year cotton production, just to point out that we did make some important back year data revisions for China on both production and consumption. Shows up here on production, but you'll also see on the consumption side in the balance sheet, we also made some changes to China. So that tightens up back year supplies by 200,000 bales. On the new crop year, reduced Pakistan again. Remember, we reduced it last year again. Flooding is persistent, affecting that crop there, and we made small changes to the African franc zone. In terms of the cotton supply and demand balance sheet, again on the back year, drawing your attention to the total supply and consumption categories. Those are both driven primarily by data revisions for China, lower consumption and lower production. And then for the new crop year, the item to really, again, point out, draw your attention to is a pretty sharp reduction in our consumption forecast for the new crop year. Just a slow start to sales overall, and a lot of economic headwinds, concern about the general economy, suggesting possibly softening consumption, softening demand going forward. Trade down a million bushels. That reflects in part lower imports by China, and you'll see China ending stocks we raised by a million bales, and reflecting their reduced consumption and higher stocks. U.S. cotton balance sheet, pretty minor changes on the production side from the crop production report this morning. But we did reduce exports, and that is reflecting our concerns about lower world consumption. And also worth pointing out, we made a pretty big cut in the season average market price this month, and that just again worth, and you're aware of this, but worth pointing out that the December cotton contract fell by about 25 cents in 1 month. So prices are certainly softening, reflecting at least in part those demand concerns. All right, moving into sugar real quick. Again, I put up the back year because, again, as you know, with sugar, we got the sort of the temporal shift between the old crop year and the new crop year based on the September 30th fiscal year. So on the old crop year, for beets in particular, we had less production in August and September, so that's going to shift into the new crop year production, the current crop year production on the other side of the balance sheet. On the other hand, for cane production, the harvest in September came in a little bit larger than expected. That's going to shift some of the cane production from the new crop year back into the old crop year. Now, sticking with production into the new crop year, we also, of course, incorporated some of those changes we got from NASS this morning. So lower sugar beet production based on lower yields, higher cane production based on higher yields. So that's offsetting much of that, some of that temporal shift in last year's harvest. Shifting back to the old crop year again. Imports, you see down 69 million. The TRQ imports down 69 million. It's 69,000 short tons. Again, that's mainly timing issue. That sugar has until December to come in, but it's coming in slow, so we're shifting some of that into the new crop year. But with that new crop year, we also have the refined sugar TRQ that was released, that was announced on September 19th, increasing that TRQ by 220,000 metric tons. But when you add it all together, we still expect the shortfall, TRQ shortfall, to be increasing. And that reflects in part the expectation that we will receive little if any shipments from Philippines, where they made a policy decision to keep that sugar for domestic consumption. So overall, when it's all said and done for new crop year, ending stocks up 162,000 short tons. Stocks to use ratio increased from our 13.5 target of last month to 14.8 this month. Mexico, kind of small changes here. Pulled production back 100,000 metric tons, mainly reflecting some dry conditions. There's been drought in some dry conditions in some of the production regions, also high fertilizer prices, labor issues, various things potentially reducing their production, and that comes straight out of exports to both the U.S. and third countries as well. So let's round things out here with meat and dairy. 2022 meat production, beef up a bit, mainly for all of these 2022 production forecasts. We're really just kind of truing up to recent data. So beef slaughter pace, we're looking at a little bit higher slaughter pace, adjusting that production forecast higher, and also higher weights. Now into 2023 for beef production, we also raised that forecast slightly. That mainly reflects the fact that, as you know, we've been drawing cattle into feedlots, and those cattle are coming into feedlots now, and they will become steak in the first half of 2023. So that's where you're seeing that increased production there for beef. Pork 2022, again, up just a tiny bit based on slaughter pace. For 2023, however, pulled production back. That's mainly incorporating information from the hogs and pigs report, lower farrowing intentions, pigs per litter, et cetera, as you are aware. Broiler production up both years, 2022 and 2023, reflecting increased egg sets and higher placements. That's happening now, and we expect it to carry into 2023. Turkey, real quick, production down in both 2022 and 2023, reflecting both hatchery data, for 2022 in particular, reflecting both hatchery data and some recent HPAI cases, and lower production carrying forward into 2023, but still up year over year. Prices in terms of steers adjusted for 2022, steers and hogs, we're just again truing up to observed prices for those species. But for 2023, hogs in particular didn't make any changes on our steer price forecast, but for hogs, pulled the price forecast back $3 a hundredweight, mainly reflecting expectations of weak demand and also much larger poultry supplies. So competing protein there. In terms of poultry, broilers, broiler price is down both in 2022 and 2023, and that is also consistent with higher production. And turkey price is up both years, reflecting tighter supplies. In terms of meat trade, beef exports up in both 2022 and 2023, mainly 2022, this is observed and expected to carry into 2023. That's mainly beef exports to Asia. Pulled back our pork export forecast for both years as well, and that is mainly lower exports to China and other Asian markets. as well. And also going into 2023, expectations of the strong dollar is also going to reduce those exports to some degree. Now, only other item worth noting here, beef imports down in 2022 based on recent data, but expected to increase. Well, we adjusted the forecast higher this month in 2023 based on strong demand, tighter beef supplies, and also that's an area where a strong dollar works in favor of those higher imports. Milk supply and demand, production up 400 million pounds in both 2022 and 2023, reflecting both higher cow inventory and higher milk per cow. Not a lot to say in terms of the import, in terms of dairy imports, but just worth pointing out export demand. Exports strengthening, especially in 2022, especially reflecting strong butter exports. And then on the skim solids basis, exports just adjusted higher for both years based on strength in a variety of products. Nothing in particular that stands out. In terms of dairy prices, cheese prices are still holding up quite well. We adjusted our cheese price forecast for 2022 and for 2023 higher. Cheese prices high despite relatively high stocks. Butter prices very strong, and also supported by relatively low stocks there. So with higher cheese prices, that's going to support a increase in the class 3 price. Higher butter prices are supporting class 4 prices. So as you can see across all the classes, class 3, class 4 raised our price forecasts for both 2022 and 2023, and the all milk price as well, up 15 cents per hundredweight this year and 20 cents per hundredweight next year. Still, however, worth noting, year over year, all of those products and class prices are down fairly substantially. And that is all I have in terms of the WASDE. So I thank you all for attending, and to everyone attending online, thank you for tuning in. We will see you back next month. And Seth,